All right, good morning, everyone. Thank you so much for joining. Today is September 11th, 2024. This is LJ Realty team meeting, and let's get started with our interest rates. So the interest rates are coming down. We are seeing a 52-week range on the lowest end of 6.35, according to Freddie Mac. So what's the highest we saw according to Freddie Mac? 7.79. What's the lowest? What we're seeing today, 6.35. Okay, does it get better than this? Absolutely, it gets better. So Mortgage News Daily, they track this on daily basis. For them, it is showing 6.22. This is legit what we have seen in the lowest end in last one full year. So we in during our meetings we were talking when we had our interest rates as high as 8%, right? So even if you have a first-time home buyer, they love the way you work. You're a professional realtor. You're showing them properties. They like the property. They simply couldn't afford the mortgage payment because it was too high, right? 8.03% is way too high for a first-time home buyer. Maybe an investor or something where they're going to get some, ROI back, return on investment back. But if it's a first-time home buyer, they simply were waiting. They were waiting for this time that we're going through right now. And I just want to make sure that our agents are aware of it and take some action on this. So when we say 6.22 interest rate for conforming 30-year fixed rates, what does that really mean when we talk about monthly payment? So if we were to ask for a loan from a lender for $100,000, so obviously if you can get it for 200,000, 300,000, 400,000, doesn't matter. Let's get the basics right. At 6.22%, and if you're getting a loan amount for $100,000, your monthly payment is going to be around $614. Okay? So if for every $100,000, if it's 614, and typically we see a property in Queens here for $500,000 or $600,000, right? That's what we're dealing with for a single family. So if, for example, if we're using 6.22 on $100,000 loan, the principal and interest is $614 per month. Okay. So if we were to times that five, meaning we're getting a $500,000 loan, right? Maybe the property is 550, maybe the property is $600,000. Your client is putting down 50,000 or $100,000 for down payment. The loan they're getting is $500,000. So you take 614 times that by five, their monthly payment for principal and interest is going to be $3,000. So $3,070 per month. Is that all? Is that what they have to worry about? Or there's more things that they have to worry about? There's more things they have to worry about. One is your property taxes. So if they're in Queens, maybe the property taxes are 5,000 or 6,000 for a single family. If they're in Long Island, maybe it might be 8,000 or 9,000 or above 10,000, depending on how much it is built and which where is it located. They have home insurance too they have to worry about, right? Home insurance, if someone asks you, it should be between $1,000 and $2,000 per year, right? Depending on how much it's built, which area it is in, and your mortgage insurance. If your client is putting down less than 20% down payment, then they have to worry about mortgage insurance. Okay? So we were to take that $3,070 per month, and we're gonna pretend like, hey, we have $500 for property taxes per month, we have $125 for home insurance per month, and we put down less than 20%. So our mortgage insurance is around $200 per month. Okay. So if you were to add all of that up, you're looking at around $3,900 monthly payment. It is definitely doable. The same scenario that I'm giving you, when the interest rates were around 8%, this person or this client was looking at total around $4,400, $4,500 monthly payment. So the monthly payments are coming down. So when does this person have this mortgage insurance removed, right? Depending on the loan option that they have, once they hit 20% equity, and if they were going with a conventional loan, the mortgage insurance goes away. So their monthly payment is going to drop to 3,700, so 3,695. Okay. So this is what your client is dealing with. They're not just dealing with principal and interest, but they have property taxes, home insurance, and mortgage insurance. Okay. And now with lower interest rates, your buying power just got a boost without doing anything else, right? Now is the time to make that move. Why? Because the interest rates are lower, right? So if you were to do the same example that we just did for a $500,000 loan, if the interest rates or when they were at 6.845%, you could have only got $469,000 loan compared to $500,000 loan. So your purchasing power is definitely increasing, or your client's purchasing power is definitely increasing. So your job is for your client to say, hey, first of all, the interest rates are coming down. Maybe they were aware of it, maybe not. Sometimes they don't know what is the interest rate as of today. So we're mentioning 6.22. That is your for your top tier scenario. So have that conversation with your client. Hey, the interest rates are coming down. How do you feel about the market? Should I start showing you properties? Okay. This is one of the loans that we're doing for a client where they actually meet the below their area medium income, which is $94,000 in Queens. If you're making less than $94,000 and you qualify to get a mortgage, there's some benefits that I'm going to go over with you. Okay, so the annual income was 94,000, down payment was 55,000. This person has no monthly debt. We have seen it on both end, guys. We have seen it where the monthly debt is ridiculous amount and they don't qualify for anything, even if the income is high, or sometimes the income is not as high as you would imagine, but there's no monthly debt. So they can qualify for a mortgage. At rate of 6.22, your property taxes of $6,000, this person can qualify up to $578,000. And they purchased the property very near that price, right, at 49% DTI. And the loan that they went with was Homeready loan option. There's a Homeready and Home Possible. Both of them have very similar guidelines, right? One of them is offered by Fannie Mae, the other one is Freddie Mac, but they have the same guidelines as long as your client can qualify for this. Number one is your income. If they're making more than $94,000, then we do not qualify for this mortgage. If they're making less than $94,000, then we show them this option. Second, okay, great, you're making $94,000. How about your credit scores? If your credit scores are 620 or more, then we can use this loan program. So you have your income 94,000 or below, you have your credit scores 620 or above, and you can put down 3% down payment on this conventional loan. Your DTI can go up to 49%, and your closing cost is going to be between 3 to 5%. It is a conventional loan. So that means it could be your primary residence or you can have it as an investment. There's no restriction. If they were going with the FHA loan, they have to live there, but not in this case here. The mortgage insurance is going to go away once they hit 20% equity. Why? Because this is a conventional loan. So when your client is telling you, hey, I make X amount of money, my daughter or my son or my brother or sister is going to be a co-signer and they're going to be added, first we tell them, hey, let's just look at your income. Let's see what you qualify. And if you're satisfied with that, meaning you can find a property with around 560 or 570, great, do it on your own. If you're going to look for a property that's 600,000, 700,000, obviously you don't qualify on your own, then we would need more maybe another co-signer or co-borrower that's going to go with this. Okay. Any questions regarding this scenario that we're using? All these examples that we're giving you guys, these are real examples from our real files that we're dealing with. Okay. Next is that if you are going to work with a first-time home buyer, make sure, even if they get a loan from us or elsewhere, it doesn't matter where they get it from, just make sure that they don't have, the loan that they're getting does not have any prepayment penalty, which is PPP is considered, is in short. So prepayment penalty is that they're getting the loan today. If they were to repay that loan or refinance that loan in next 6 months or a year or 2 years, do they have to pay anything extra? Sometimes it's a percentage, sometimes it's how many months they have to pay for. But whatever the case is, if you're a first-time home buyer, I don't want any PPP on my loan, right? Maybe an investor that's going to flip a property, they can go with that type of loan. If you are a first-time home buyer, just make sure your client does not have this, or they do not have to worry about this piece here, prepayment penalty. Okay. Next, guys, the best news that we received so far is the inflation data. This data came out this morning around 9 o'clock. So you guys can see the inflation data here. For August, we hit 2.5% inflation. That is the lowest we have seen in many, many months. Look at the chart here. We have seen as high as 3.7 in September, and that's the reason in October of last year we saw the interest rate as high as 8%. The government was saying that here, or the Fed was saying that, hey, the inflation data is just showing that the rate is too high. We have to control, so we have to increase the interest rates, which they did. Since then, they have not cut any rates, right? And we have seen the inflation data come down to where they want it. They want it around 2%. We are at 2.5%. So that's a really good news. This came out this morning. So if you're having a conversation with other realtors or your clients, just say, hey, inflation data is coming down. That means hopefully the rate cuts will happen soon and the interest rates should come down even further down the line. So if inflation data is at 2.5 today, the next reading is going to be next month on October 10th. We saw the data for unemployment rate that came out yesterday, and that also decreased to 4.2%. So both of these indicating are in a positive note for our next Fed meeting. When is the next Fed meeting? On the 18th, which is next Wednesday. Okay. So one of the articles said that, hey, first week of October could be the best time to buy homes. Why is that? Because there's going to be less competition out there. Because people who already have kids, they're already in school, they're good, right? They don't want to make that move right now. The interest rates are coming down, and some clients are going to wait for the interest rates to come down even further. Maybe they will wait until January, February of next year to do this. But if you're buying in today's market, every offer that you're putting in today, it should be, when you're putting in the price, it shouldn't be as aggressive as you may want it to be, right? Because there's going to be different markets where there's buyer's market, seller's market. Every time you put in a offer, find out, hey, how's the market in that area there, right? How's the market performing? So I can make sure that either my offer is going to be really aggressive or it's going to be laid back and I'm going to go ahead and increase the offer if it's needed. And I don't want to waive any contingency in today's market or in October of next month. I don't want to waive any of these contingencies because there's less buyers out there. What is going to happen in next year around March or next springtime is going to be a lot of buyers out there because the interest rate already came down, so the market is going to be hot. At that time, if people who have waited, they were simply paying the rent for someone else. They were not building their equity. If they were to buy in October, by next spring, they already built some equity and they don't have to go with higher offers or waive any contingencies when that time comes. Okay, so when you're talking to your clients, they might say, hey, is this a good time to buy? The interest rates are coming down. Should I wait for the interest rate to come down even further more? If they're going to wait, they got to pay for it. If they're going to go ahead and purchase today, they will be building equity over time. Okay, sorry about that. It just zoomed in a bit. Okay, any questions, concerns? Okay. So similar guidelines here or headlines here for your mortgage rates move lower, but where are the home buyers? I was having some conversation with our realtors out there too, and some of them say, hey, my clients are simply not ready. So I say, hey, focus on the ones that's ready. Focus, look at your database, see how many people you have in your KV core, and start looking at their search alerts. Is there any new property out there? Send it to them if they shows any seriousness, right? There are going to be people who are going to be purchasing and there are going to be people who are going to be waiting. You are a professional. You're going to be with the moving train. Anybody that's right now ready to purchase, I want to be with them. Anybody that's going to be waiting for 6 months, I can't force them to buy a house. I can keep sending them the links. I have no problem with that. But when it comes to showings and all that, they're just not ready right now. Maybe they're not ready to write your or sign your agreements right now, right? So we're going to go through those. So just make sure that the next Fed meeting that we're going to see on September 18th, we're expecting the rate cut to be around 25 basis points. So you can see that 71% of the traders out there think that there's going to be a 25 basis points cut, while 29% says that it might be 50 basis points. Majority of the news outlets that I'm following and you guys are following, that you guys are going to see that majority of them are saying that 25 basis points. So even if that 25 basis points happens, the interest rates should come down next week. Okay. Next, let's talk about our commission. There's so many articles out there where they're trying to educate the home buyers out there that, hey, things are changing and this is for real. If you can't keep it the way it was before, because two things already changed, right? Written agreements, we need it. And second is that MLS does not have any commission there. So you have to negotiate. Some of our agents that are brand new might be a little scared to pick up the phone and call the listing agent and say, hey, what are you offering for this deal? That just got to be part of our conversation now, right? That, hey, this is Miranda with LJ Realty Team. I see 123 Street. Is that available? Yes, it's available. How much are you paying to the buyer's agent? Or are you offering anything to the buyer's agent? Right? And they will tell you if they are or not. But we just got to make that as a norm that we have to use it on a regular basis. I want to find out if it's available. Are you offering any commission? Okay. Overall, a lot of articles are saying that, hey, the commission percentages might come down just because there's more competition out there, right? And some of these guys, especially the new realtors out there, one of the key points was this, that, hey, I'm seeing lower fees because a lot of agents who are not that strong. So in order to get the buyer to sign your agreement, they'll simply say, hey, I'll lower my cost. One of the example I'll tell you, one of our agents was saying, hey, he asked for 1.5%. The client said, no, I want to give you only 1%. And the agent said, no, I need to charge 1.5. That's what I want to charge. If the property is going to be over $1 million, then I'll charge you 1%. Right? You guys can break it down in different forms. Hey, if you're going to buy a single family, I'm going to charge you this. If it's going to be a two family, or the value of the property, if you're going to buy anything less than $600,000, I'm going to charge you this. If it's going to be more than $600,000 or more than a million, I'm going to charge you this. Right? It's all negotiable, and it's not set in stone that you have to charge them X amount. Right? It's all negotiable, and you should be negotiating your services. Right? If you're a first-time home, if you're working with a first-time home buyer, understand their needs too. They have to worry about down payment, they have to worry about closing costs, and they have to worry about your commission as well. If it's written agreement, that is, legally binding. So you have to, you can take them to court if they don't pay you. So you want to make sure that, hey, if you can get paid from the other side, explain that to them. But if you are not getting paid from the other side, your buyer still has to pay you that. If you got a 2% signed, right, agreement signed for 2%, can you lower that? Of course, as a first time home buyer, you understand that they have a situation. You initially told them, I'm going to charge you 2%, and now it's all up to you if you want to lower it. One of our agents asked that, so it is completely negotiable. Even if they sign something at 2% or 1.5% or whatever percentage, and you want to change it, as long as both party, your buyer and you agree to it, you guys can do that. Okay, you have to ask yourself, hey, should I or would I actually lower my commission? Right? Am I prepared to tell the buyers, hey, how can you help them purchase the property? Because they don't want to give you any money if they feel like they can do your job better than you. Oh, I can find a property on Zillow. I can go ahead and schedule a showing right from there. But they don't have any buyers on their side or buyer's agent on their side. Right? You need to tell them, explain to them exactly what we have to offer and who's involved, what fees are involved, what is the time frame to close a deal. You're the one who have to guide them, right? Some of these guys say, hey, I don't want to have a buyer's presentation until they sign the agreement. I don't think anybody's going to, or not majority of the people will not sign any documents unless they know what value you're bringing to them. Okay, so just understand that you have to show them that you're bringing value to them, which you are if if you're a licensed realtor. You have the tools, you have the guidance of closing a deal. right? So you have all that, you are expert in this. So you are the one who have to show them that, hey, I can get this deal done. Okay. So from the seller's perspective, that as a seller, they say, hey, if I hire someone, let's say I hire Paul as my listing agent, I have the right to just pay him. I don't want to worry about, Harjeet getting paid for as a buyer's agent. He should be worried about getting paid from his side. So again, that's the reason we have this change. We understand that we have been going through the same scenarios for many, many months now, but we want to make sure that all of our agents understand the concept. Okay. And if you're the listing agent and your property is on the market for more than 48 days, your median days for on the market is what, 48 days here, you maybe need to adjust the price. If you're not going under contract within 48 days, I would highly recommend that you review your price again with the seller and adjust it. And the conversation you want to have with the seller is that, hey, when I'm adjusting the price does not mean that we're going under contract with that price. I just want to have more eyeballs at this house. When I'm hosting an open house, I want to see more people coming in so we can have more offers. And you, Mr. Seller, you can choose which offer. Right now, we have this property on the market for 60 days and we do not have any offers. Every time I'm hosting an open house, I'm seeing one or two people come in. I think it's just not enough. So let's adjust our price. It's just another strategy. And let's get more people coming into your house and get more offers for you. Okay. After 48 days, you should go under panic mode and make some adjustments. Okay. So we definitely want to show up for our clients, guys. When you are scheduling a meeting with them in the office, come at least 15 to 20 minutes earlier. Do a full setup. If you want to have your buyer's presentation printed out, come at least half an hour earlier. So this way we have enough time. If you already have your presentation ready for them, maybe 15 minutes is fine. But at least half an hour if you want us to print out your buyer's presentations, so you can have 2 or 3 copies for them, right? That which they can take with them, and you're going to be reviewing the whole 9 yards, the whole concept with them. And when you're doing a showing, let's say your drive is 20 minutes away from this. Let's say it's in Hicksville, maybe 45 minutes. You don't want to drive all the way there and then realize your client is not coming, or they can't make it, or they're running late. Have a conversation with them, get verify that they're actually on the way, right? They're giving you a confirmation, hey, I'm leaving. I want to make sure you're leaving right now. You're on the way. Whatever the conversation is, just have that. I don't want you to waste your time and be upset after driving X amount of time and they're not there. Okay. And you want to basically continue to do education, be the guide for them when it comes to consumer education, right? They don't know the different loan programs. They don't know who's involved in the transaction. They don't know how title company is different from a appraisal, right? We want to be that guide for them. And we want to build relationship with them, focus on those relationship on regular basis, right? When we say they're purchasing a property, that is going to be one of the, or maybe the biggest deal in their lifetime. So we want to make sure they get it right, and you help them get it right, and they give you referral business. Okay. If you want to be engaged in community engagement with different events that's happening, the next one is going to be with us on September 21st on Saturday, right? If you guys want to be part of that, we will be sending out flyers for that. You guys can come through, but we want to be engaged within our community and we want to measure our success. This is the hard part. Knowing the fact that, hey, it's been 3 months and I haven't closed the deal yet. Hey, it's been 6 months and I haven't closed the deal yet. Or it's been a year now and I haven't closed the deal yet, right? Once you start acknowledging that, hey, we have this problem that I haven't closed the deal yet, or it's been a while now, I need to take some action, right? If you simply say, hey, I don't need to worry about real estate, then maybe real estate is not for you. But people who are focused on this, who's measuring their success, they're growing from that. So if you have 3 clients last month, maybe I want to have 6 clients this month, right? If you have closed 2 deals last month, maybe I want to close 3 deals this month, right? It could be from both ends. So even if you're doing well, you can do better. And if you're at zero, it's only going to get better from zero, right? The point here is to understand the fact that you have to grow as a person, as an individual, as a professional realtor, because you can. You have all the tools to do it. Okay. Next, guys, this is a Realtor.com report, and it was really focused on what we mentioned earlier. October from September 29th and October 5th, that is the week that usually have most deals under contract. And after that, it starts to fall down because of the holidays, as we're going to see for Thanksgiving or, Christmas and everything like that, right? All the holidays. But in October, the first week of October, this is where I really, from now until October, I just want you to focus on all your clients, everybody that's in your KV core. Hey, the interest rate came down. I already set up the alerts. Could I show you the property, guys? Right? That's the conversation you want to have with them. So this chart right here shows you medium home prices versus inventory. You guys can see that the teal line, right? That the green one is your inventory and the black line is your median price. So the median price have came down a little bit, right? Again, we're perfectly fine with that, right? If my client likes the property, I'm not trying to pay the top dollar right now because it's going to be is not the best thing for my client. I want to save them as much money as possible, and inventory is increasing, so my client have more options. Okay. Next is when the client asks you, how's the market, right? Is it sellers or buyers market? So on a national level, right, through the whole United States, we are still seeing a slight seller's advantage. So this is not per county or per city. This is the whole United States, right? Overall, it's still a seller's advantage because of low inventory. It is growing, but it's still not as high as we want them to be. And it might be where in Hewlett, New York here, where's the buyer's advantage? Because there's not a lot of inventory out there. Sorry, there's plenty of inventory out there for buyers, and they can put an offer with all these contingencies. If the same buyer is going to Franklin Square, guess what? It's a completely different story. If you try to lowball in Franklin Square, you're not going to get that deal done because it's definitely a strong seller's market. So every time you're putting in an offer for whatever area it is, I want you to go to altos.com, ALTOS, and just type in the city, and you will see this chart. Okay, so you guys can tell them, hey, as national, this is what we're seeing, slight sellers market, but then different areas might have buyers advantage, and there might be some markets that is really hot and is very strong sellers market there. Okay. So next, we want to talk about what is the difference between assessed value, market value, and your appraisal value. Your client might ask you this, so as a realtor, we should definitely know the definition of this and how they're different, right? As a homeowner, which value do I want it to be lower and which value do I want it to be higher? So when it comes to assessed value, this is the value placed on a property for tax purposes, right? So as homeowners, you want your assessed value to be as low as possible. Why is that? So you pay low taxes. I don't care about assessed value. That is not my market. That is what the government is going to charge me on the property taxes for this property here. So I want it as low as possible, right? So usually every homeowner should get a letter every year stating this is what we assessing your market value at, right? It will give them the breakdown. And sometimes when they look at a first-time home buyer or first-time home sellers that's going to sell their property, sometimes they look at their this letter and they come up to us and it's like, hey, why the government is saying that my property is only worth $400,000 where I know that I can sell it for $700,000. So our answer is that, hey, this is based on your assessed value. You want this number to be as low as possible. Okay. And what is the market value? When we say market value, the same house that we're giving the scenario for, if the bank, your assessed value is at $400,000, the market value might be completely different. It might be $700,000. That is the value that the price that your buyer and the seller would agree upon, right? to whatever the contract price is, right? As long as the buyer and the sellers are agreeing on this price, we're good. That is your market value. That's what you want as a home buyer. You want that as high as possible. Even though the buyer is saying that I'm willing to give you guys $700,000 this property, how about the appraised value, right? This is the appraised value is going to be an estimate from a professional appraisal. There's going to be a third party is going to verify that, hey, you're going to go to buy this property for $700,000. Is it really worth $700,000? When your agent or you as a Janet or Julian, when you guys actually do this, putting in an offer and you tell your buyer $700,000, it sounds good, man. Look at these comps I did. There's no problem. $700,000 is a good number. But now the bank says no, we think it's 650. Then we do have a problem. So these three values, they're very different from one another. But when you're talking to your client, you got to tell them, hey, assessed value, you want it as low as possible. Market value, you want it as high as possible. And appraised value, you just want to match what you have agreed on the contract. If it's lower, then we will have a problem. We will have to renegotiate depending on the contract. Okay. So if you're working with a buyer, if you have a brand new lead, it could be a lead from online lead, it could be an office lead, it could be your own sphere, doesn't matter how you're getting that lead, right? And you're just getting started with them. These are the steps, these are 7 steps that I want you to follow with every client, right? Number 1 is your buyer's presentation. When you're speaking to them, right? You just don't want to be on the phone and say, hey, there's few steps that involved in real estate. No, let's have them come to the office, sit in the conference room, and have your laptop or have your buyer's presentation ready and just go through those slides one by one, right? Once you have presented that buyer's presentation, then you're going to ask them the buyer's questionnaire. This is when you're asking them for their name, their address, their email address, their phone number, which area they want to be in, how many bedrooms, how many bathrooms, private driveway or not, all those questions. It's going to take you 5 minutes to do that. And then the next 5 minutes, you could be sitting right in front of them if you have your laptop with them. It makes a big difference because when you're adding them to KV Core, you can send them a message. Hey, Mr. Buyer, starting today, you're going to start getting messages from this system here, and it's going to come from this number. Just save it under my name. Okay? You're going to set up the alerts with them. It makes a huge difference when you're drawing on map with them here. And because they will might say, hey, I don't mind going a little bit further down on this way, north, south, east, west, doesn't matter when you're drawing with them. Okay? It will give you more properties to view, more chances of you going under contract quicker. And once you have set up the alerts, then you want to go to transaction desk and create a transaction file for them. You want to choose buyer's template. All the forms that you need there are there for you, and you want to make sure that you get them e-signed. You want to do all of these steps, first 6 steps, until once they are all completed here, then you can start showing them the properties. I'm not showing them any properties until these 6 steps are done. Okay? So this once we have the document signed, then I want to keep focusing on showings. Hey, I have this Mr. Lead here, and I want to make sure that I'm showing him or her every week. Okay? Some people say, hey, every week there's not enough inventory out there. Trust me, your clients are still going to open houses without you knowing that. If they're really aggressive, they're doing the showing themselves if you're not part of it. So your job should be, I want to show them every weekend until contract. I don't care how long it takes me. It could be 2 weeks or 2 months, but I want to keep showing them, keep showing them, keep showing them until I go under contract. Okay. So this is the live example I'm about to give you guys. So if I have a brand new client, I'm going to share my screen with you guys. Okay. First, I'm going to ljagent.com. When I'm going to ljagent.com, I want to click on Realtor Tools. I'm putting in the password. For some reason or any reason you guys don't remember the password, just ask. We are trying to send you guys on WhatsApp or regular messages as well from time to time, but if you need it and you don't have access to that, just send me a message and we should be able to give you that code right away. Okay. So first, I want to bring some value to them. I want to have my buyer's presentation. So you guys know where to find it, how to print this out, and you want to share that with them. Okay? Go through, spend 15 to 20 minutes with them, going through the whole process. Bring value. Everything in these slides you should be able to understand. We are adding the a little bit more slides to this with loan options and making it a little bit more better. But for now, around 80 to 90% of this is really solid, all the information that you need to tell your first-time home buyers. Okay, I spent 10 to 15 minutes on this. Then I'm going to go and click on forms, and I want to go to buyer's questionnaire. Okay, I want to ask them these basic questions that we have. Once we have asked these questions, then I want to go back to our Realtor tools. I want to click on KV Core. Okay, once we're in KV Core, I want to add that contact right away. Same information that you picked from your questionnaire, you're filling that out in here. Okay. Once you have added them, I want to follow up with them and I want to make sure the alerts are set up for them. Okay. So first I go to timeline. I'm looking at if there's any activity going on with this client. I'm clicking on alerts and I want to make sure the alerts are set up. Like this lead here, if there's a lead and there's no alert set up, what is the point of having KV Core? The same thing that we have here, we can put in a notebook. We can use any regular CRM system that are usually free out there. The reason we pay top dollars for KV Core is for this feature. So you don't have to keep at it, asking the same or trying to do the same research every single day. You set it up once. Every time there's a new property in the market, you can easily see that. Okay. Anybody that has any questions regarding this, this is one of the core things that we have to know this. We should be able to add them to KV Core and set up alerts. If you need any questions or if you have any questions or want to go over this, set up a one-on-one meeting with me so you guys are expert in this piece here. Because truly we cannot help our client if we don't know this piece here. Okay? So next, I want to look at this example here. This is for Sunil here. This is for even for renting, you can do the same exact thing. And now I want to follow up with this client on a regular basis. So in the beginning, I want to make sure that, hey, this property in Elmont this is the last one I saw. If you're following up with them on a regular basis, now automatically you will see the changes. Hey, this property is going to move to the right, and the next property is going to come here. So I want to send them this property before Zillow sends them an alert, or Redfin or Realtor.com or any other websites out there send them any alert about this property. I want them to get an alert from me before anybody else. So if you make a habit of following your clients in the morning or in the afternoon, depending on your schedule, just be consistent with it, right? You're doing a regular basis, you're following up with them. Even if they're not replying, trust me, they're paying attention that, hey, you're sending them messages on a regular basis. When the time comes, they will come back to you. Okay. So now I have done this part here, and now I want to get one file done for your transaction desk, right? Some agents are confused. How do I access transaction desk? The logins doesn't work for them. So the rule is that first log into your Stratus. Once you're logged into your Stratus, you want to go to Info Center and you want to click on InstaNet. Okay. Some people say, hey, why is it different name? It just happens to be two different names for them. I'm not too sure why. Transaction Desk and InstaNet is the same exact thing. So once we click on InstaNet, it automatically going to log you in because it's part of MLS Stratus login, and you'll be logged into your dashboard. Okay. Another way of doing this, once you're logged into Stratus here already, you can go back to LJ Realtor Tools and click on Transaction Desk, and it will take you directly to the same page. Okay. Next is that I want to add a transaction. So I want to click on Create Transaction. Let's say John wants to buy a house. The format that we use is put your client's name, either they're the buyer or the seller, and then your name. So let's say John is the buyer and Janet is the agent. So for templates, I'm going to click on B, buyer's buying template. I am unchecking use wizard because I want to go directly to the forms right away. So all I did after hitting create transaction was just type in the name and chose that template and uncheck your use wizard and then click on create. Okay. If you're creating a brand new transaction, all the forms that we need are fillable, are already showing up. If you have an old file, anything prior to last week, then you would have to manually add those forms in there, which I'm going to show you too. So once I'm in this transaction, some agents start filling out this form here or these fields here. You don't have to. You don't have to fill nothing out right here. What I want you to focus on is these three tabs to your right. Number one is your contacts. Same information that you put in KV Core, you want to tell Transaction Desk 2, hey, this is my buyer. So I want to click on Add, Create New Transaction Contact. What is the type? He's a buyer. What's his name? John Smith. What's his email? Because we need e-signed, johnsmith@gmail.com. And I'm clicking on Save. Okay, now the transaction desk knows that John Smith is the buyer, so any forms that you send to them, right, you're assigning, it's automatically going to say, hey, John needs to sign here. Okay, so before you even touch the forms, we should be adding contacts. If you have John's wife, Betty, on the line, put her in there as well. If there's son or daughter is involved, is going to be on the contract, add them. Doesn't matter how many borrowers that you have or clients, you want to add them right away under contacts. Then I want to click on forms, and we put it in order for you guys. That first form that we need is exclusive buyers representation agreement. Okay, when I click on that, I can start filling it out here, guys. Remember, just 2 weeks ago when we were trying to do this, we were taking the longer route of filling it out elsewhere, uploading it, none of that. Everything is integrated right now. So as a broker fees, let's say I want to charge them 1.5%, it's all negotiable. And I want to have this agreement for, let's say for, I don't know, for a month, right? Some people think it's too little, but I want to make sure that I show them enough houses in the next 30 days and go under contract with them. This is a residential. They're looking in Nassau County. He's looking for 3 bedrooms. He's looking for at least 1 bathroom. Price range, let's say, price range, you want to put it at least $100,000 gap here, guys. So 500K to 600K. If it's going to be any, is it all cash deal? Are they getting financed? Right, majority of them are financed. And then you would have your buyer sign here. Already knows that John Smith is there, their email is there, right? Your information will be already pre-filled. So it's a really solid system now. So because we don't have to do 2 steps, we can do everything in one. So once I'm ready for John to sign, I'm going to click on this pen icon where it says send to new authentic sign. Okay. Now I want to scroll to the part where he needs to sign there. I'm going to click on add participant, add from transaction, click on John Smith and select. Automatically, the sign signature part came here. But guess what? It's under telephone. So I can click on it and scroll it up, move it around anywhere I want. So I want it to be under here. And once I'm ready, I'm going to click on next and I'm going to click send. Okay. Right after I send them that, I want to click on forms and I want to do the same thing to agency disclosure and your housing discrimination form. So these 3 forms should be signed at the same time. Okay. How are you going to know that if they actually signed it? You're going to click on signing. And now under new, you can see that, hey, the transaction desk already sent them for e-signature, but is not completed yet. Once he or she completes it, then you will see it says the word completed, and you can click on it. And in here, it will say download signed PDF file. Now you can start showing them the properties because now you have a fully executed contract or agreement with them. They're going to be exclusively working with you for next 30 days, and your job should be going under contract with them. Okay? Questions, concerns, guys, on this? Okay. So these are the, yeah, for rentals is similar. When you select a rental does not have this exclusive, obviously different forms or a similar concept. Right? For renters, I don't have to do a buyer's presentation, obviously, right? But for renters, I am asking them a simple question, which area, their name, address, phone number, and I'm putting that in KV Core, still setting up the alerts in there, and when the time comes for transaction desk. Okay. Yeah. So as a buyers, if you're working with first-time home buyer, you're working with investor, doesn't matter which type of client it is. You want to follow these steps, these 7 steps, and in order to go under contract. If you're skipping any of them, that means later on we would have to come back and see if we can resolve it. Meaning when the time comes for the closing and you don't have your anti-discrimination form signed or you don't have your agency disclosure signed, we will have an issue with that. So because of the dates, they have to be prior to going under contract. So you want to make sure that you have done this before you start showing. If your client is not willing to sign your documents, that means they're not ready today. So that means I'm not worried too much about them. Hey, I can set up the alerts for you. I can start sending the properties, but I cannot show you any property without, you signing these documents. Even maybe some of you guys noticed this. One of our agents sent me a screenshot that on showing time, a pop-up window will come up and it will say, hey, verify that you actually have your buyer's agreement signed before you can start showing this property. Okay, so right now maybe it's been only 30 days or 40 days until this new things just started, but next 6 months or next year, everybody's going to be following through this. So we want to make sure that you guys are professional, staying up to date with them, having your buyer's presentation, asking them the right questions, adding them in KV Core, setting up alerts for them, and going through the transaction as we mentioned. Transaction is very simple, very straightforward, but if you're not able to do one, that means you're not able to do any, right? So you want to make sure that you know the concept, how to use these tools, and it's perfectly fine. I don't care if you're hanging your license with us for last year, 2 years, and you just want to get started with us. It's perfectly fine. But I just want to make sure that if as long as you're willing to close a deal, we have the right tools to help you do that. Your job is to, which is the hardest one, which in my, because we have loan officers, we have, realtors out there, but I think realtors are the ones who are always out in the open, going, showing different properties, driving around left and right, and you job is really hard. But you guys can make a good living out of it if you just focus on how could I go under contract, how could I go under contract every single month, and you can do that. Okay. All the tools that you see on ljagent.com, they're there for a reason. There's nothing extra in there. Anything that we put in there, it should be helpful to our realtors, period. If it's something that you see something extra, let me know. I'll remove it. But I don't think there should be anything in there that is not helpful. So if you haven't reviewed all the tools in there, please do so. Click on the links. Where it's going to take you. If it asks you for login, you need any password, ask me about it. But everything is there for a reason, guys. Okay? We got 10 minutes left, guys. Anybody has any question, you can speak up. You guys are taking care of your MLS dues. You guys know that it is due this month, end of this month now. So you guys can go to MLS Stratus, just like how we say click on Instanet. But now you guys can click on Pay My Bill Online, and it will take you to your MLS Stratus login, same exact one. Okay. You're going to click on Menu, click on Pay Your LIBOR Bill there, and you guys can make a payment. I send you guys a separate message regarding the fees amount. there was a screenshot sent from our agent saying that, hey, they're asking me to put $50 more, but that is just to if you that is just optional. 596 is what you have to pay. Those are your dues. Anything extra, you can click on modify and you can put in the amount zero there because you don't want to do anything extra, right? It's already hard to pay this 596. So I just want to make sure that you guys can pay that off by September 30th. Okay. After you make this payment, the next payment is going to be due is going to be for your one key MLS that's going to be due in January around $175. Okay. All right, guys. So when we're talking about our agreements, I just want to make sure everybody's on the same page. If the buyer's agreeing to pay you 2% and the listing agent is offering you 1.5%, that means you can only charge your client 0.5%. Because 1.5 is coming from the listing side and total is 2%. Okay. On the other hand, if it's flipped, if the buyer's agreement is 1.5% and the listing is trying to offer you 2% or it's offering you 2%, obviously you want to get paid 2%. You can do that, but with a amendment or a new agreement from the buyer side. Okay. So you want to tell your buyers, hey, I understand you're a first-time home buyer. I understand that you were worrying about closing costs, your down payment, that you got to worry about me now. I want to make sure that we can put it in the price. We can lower, we can, if you're going to pay me from your pocket, I can just make a lower offer, right? Or we can, obviously, every offer that I'm putting in, I want to request to the listing agent, hey, is the seller going to pay any percentage? Right? We should never assume that the seller is not going to pay. Every offer that you're putting in, you should be asking the listing agent, hey, can the seller pay not the full percentage, but even a percent, half a percentage? That will still help your client. Or you can make an offer with seller's concession. All these strategies, there's only 2 or 3 different ways you can go about this. So if you have any questions, you want to go over this one-on-one with me, please do so. I just want you to be very comfortable and have that confidence when you're talking to your clients. Hey, these are the options that we do have. Okay. So guys, a lot of agents are starting to doing this where they're just simply sending us the address for the property and say, hey, please do the comps for me. We don't have any problem doing that. Just send us the address. We will give you a PDF. Josh and I, we can do the same thing here. And we just type in the address and give you a full report. And you can have a third report along with your geodata, RPR, or your regular comps, right? So use us for that. Any offer you're about to submit, hey, I'm about to put in an offer for $1 million, right? Could you do some comps for me? I have no problem doing that. Just send us the address and we'll send it to you within minutes. Okay. I want to say congrats to Rahul for closing this deal in Farmingdale. It was a one family, 2 beds, 3 baths for $817,000. And also Paul for closing 133rd. It was also one family in your Jamaica Queens here. The reason we share these with you guys, we want to encourage our team members to sell more, buy more, so this way we can be producing and making good amount of money out of real estate. Both of these deals were completed by LJ Mortgage here as well. So Josh was the one who was doing the loan for them. Both of them was done fairly quickly. We had an issue with this deal with the 1 or 2 conditions, but the first deal was very smooth. So we are very transparent with you guys every time. There are some deals we can knock it down within a couple of days or a couple of weeks, and some deals might go a little bit longer, not because of us alone, but because of the buyer's conditions or your seller side too. Okay. So when you're talking to your client, it's like, hey, Mr. Buyer, how do you know that you're actually getting the best rates and terms? By comparing it, right? Even if they don't want to come to LJ Mortgage, they want to go to 2 or 3 different lenders out there, please do so. So this way, do you know for sure that you're getting the best rate and terms? Always think for your clients, think how you can bring value to them and how they can stick with you and give you referrals down the line. Okay. Always ask yourself, how many leads am I working with? How many people I need to follow up today? Right? If you have a full-time or part-time job, there's no problem with that because we know that real estate is not consistently bringing in commission every month, so you need a side hustle. but we want you to make your real estate license, use that as your primary source of income. It is doable. You just need more leads, more follow-ups, more dedication, and make sure that you guys can close more deals down the line. Okay? Use our loan officers when you want to host any open houses, and any time you have any questions regarding it, loans or anything, contact any of our loan officers. You don't have to just rely on me or Josh here. You can contact any of them. We're a family here. We want to make sure that everybody can help each other out. Okay. With that, that will do it from my end. Any questions, concerns, any topics that you guys want to go over next time, just shoot me a message. Anything on your mind, guys? Good. All right, guys. Thank you so much for joining. I will see you guys next time. I hope you guys learned a thing or two. We'll share this video later on with you guys. Thank you.